Let me start with something uncomfortable. A lot of middle-class Americans aren't failing because they're lazy or irresponsible. They're stuck because they're doing exactly what they were told to do. Go to school, get a stable job, buy a house, finance a car, work hard, save a little, repeat. On paper, that sounds like a solid life plan. In reality, for many people, it quietly creates a financial treadmill that's almost impossible to step off. Think about someone earning $85,000 a year in a typical US city. That sounds like a good income. After taxes, healthcare, retirement deductions, and basic expenses though, that paycheck shrinks fast. Housing alone often eats up 30 to 40% of income. Add a car payment that averages over $700 a month, rising insurance costs, groceries that have climbed significantly since 2020, and suddenly there's very little breathing room. Surveys have shown that a large percentage of Americans earning over $75,000 still report living paycheck to paycheck. That doesn't mean they're reckless. It means the system around them has changed faster than their income has. One of the biggest reasons the middle class feels stuck is that wages have grown slowly compared to the cost of assets. Over the last few decades, real wage growth has been modest, while housing prices, education costs, and healthcare expenses have surged. The S&P 500 and real estate values have multiplied many times over, but salaries haven't kept the same pace. This creates a strange situation where people who rely entirely on wages feel like they're working harder every year just to stay in the same place financially. Let's talk about the car example because it's incredibly common. Imagine two neighbors with similar incomes. One buys a brand new SUV with a $750 monthly payment because it feels like a reward for working hard. The other buys a reliable used car and invests the difference into an index fund every month. After 10 years, the first person has a depreciated vehicle worth far less than they paid for it. The second person might have an investment account worth well into six figures, assuming long-term market returns around 8 to 10%. Same salary, same decade, completely different financial trajectory. Not because one person earned more, but because one decision compounded differently. Another trap is lifestyle inflation. Every time income rises, expenses quietly rise with it. A promotion leads to a bigger apartment. A bonus turns into a vacation upgrade. A raise becomes a justification for a nicer car. Psychologically, this makes sense. People want visible progress, but financially, it keeps the middle class stuck in a loop where higher income doesn't translate into higher net worth. Studies consistently show that many households increase spending almost in step with raises, which means wealth accumulation doesn't accelerate the way people expect it to. Taxes also play a role, though not always in the way people assume. Most middle-class income comes from salary, and salary is taxed immediately and predictably. There's little flexibility compared to business income or long-term investment gains, which often receive different tax treatment. This doesn't mean the system is unfair by design, but it does mean that relying solely on wages makes it harder to accelerate wealth compared to owning assets that appreciate over time. Then there's the psychological side, which might be the most powerful factor of all. The middle class is often taught to prioritize stability above everything else. Stable job, stable mortgage, stable routine. Stability is valuable, but it can also limit risk-taking, career changes, or investment decisions that might lead to higher growth. Over time, stability without ownership becomes a ceiling. People work hard to maintain their current lifestyle instead of building something that eventually works for them. Consider housing, for example. Buying a home can be a smart long-term move, but it can also create financial pressure if the purchase stretches the budget too far. Many homeowners end up house poor, where a large percentage of income goes toward housing costs, leaving little room to invest or adapt. The home builds equity slowly, but cash flow stays tight. That feeling of being stuck isn't imaginary. It's built into the structure of the decision. What makes this even more frustrating is that the middle class often looks wealthy from the outside. Nice neighborhoods, decent cars, stable careers. But wealth isn't about appearances. It's about optionality. The ability to say no, to change direction, to survive unexpected events without panic. And optionality usually comes from assets, not just income. So why do middle-class Americans stay stuck financially? It's rarely because they don't try hard enough. It's because the traditional formula prioritizes consumption and stability over ownership and compounding. High expenses grow faster than wages. Lifestyle expectations expand with income. And without assets working in the background, financial progress feels slow even when effort is high. The solution isn't extreme frugality or quitting your job to chase risky ideas. It's a shift in focus, using salary as a tool instead of a destination, building assets slowly and consistently, questioning whether every upgrade actually improves long-term freedom. Because the middle class isn't trapped by lack of effort. It's trapped by a system of decisions that look normal but compound quietly over time. And maybe the hardest truth to accept is this: being stuck financially doesn't always feel like failure. Sometimes it feels like success. Until you realize that despite years of working harder, you still don't have the flexibility you thought you would.